Assalamualaikum and very good evening. My name is Khairul Akman and I will be present background of company. Pharma Niaga Berhad. Pharma Niaga Berhad is a prominent pharmaceutical company based in Malaysia. It is actively involved in the manufacturing, marketing, distribution and logistics of pharmaceutical and healthcare products. The company was incorporated in 1994 and operates along the entire pharmaceutical value chain. Its services include research and development (R&D), manufacturing of generic medicine, logistics and distribution, and community pharmacy operation. Pharma Biotech Sdn Bhd. Duo Pharma Biotech began with the establishment of Duo Pharma Manufacturing Sdn Bhd in 1997 and was incorporated as Duo Pharma Biotech in 2020. It is a Malaysia-based pharmaceutical company engaged in the manufacture and distribution of pharmaceutical products.
I will be presenting the liquidity ratio analysis of Pharma Niaga Berhad. Covering, we will focus on two key liquidity ratio, current ratio and quick ratio. This ratio indicates the company ability to meet its short-term financial obligation. Let's start with the current ratio, which measures the company ability to cover current liabilities using current assets. In 2020, the current ratio stood at 0.77 times, meaning Pharma Niaga had 0.77 ringgit in current asset for every 1 ringgit of current liabilities. In 2021, a strong year with a 75% jump in a current asset, pushing the ratio up in 1.10 times, the only year it exceeded 1.0 in this period. 2022 and 2023 both years recorded a decline in current asset and an increase in liabilities. This resulted in the current ratio dropping to 0.65 times in 2022 and further down to 0.55 times in 2023, highlighting potential liquidity pressure. In 2024, the company saw a modest recovery. Current assets increased while liabilities slightly decreased, improving the ratio to 0.61 times. Next, let's look at the quick ratio, which provides a more stringent sense of liquidity of excluding inventory from current assets. The quick ratio performance was as follows. In 2020, the quick ratio was 0.28 times. In 2021, quick asset dropped by over 53% while liabilities surged. This led to the ratio falling to 0.24 times. Despite a slight rebound in quick asset, liabilities continue growing faster. This caused a marginal dip in the ratio to 0.23 times. Quick asset improved, and although liabilities increased, the ratio rose slightly to 0.26 times in 2023. 2024, the company recorded continued growth in quick assets and a small reduction in liabilities, resulting in a healthier ratio of 0.30 times. Thank you to liquidity ratio analysis for Duo Pharma Biotech Berhad. Let's start with the current ratio. This ratio shows how many times the company's current asset can cover its current liabilities. In 2020, the current ratio was 3.05 times, indicating a strong liquidity position. In 2021, current liabilities rose significantly by 53.20%, which outpaced asset growth. This caused the ratio to drop 0.15 times. In 2022, both assets and liabilities grew, but liabilities increased slightly faster, reducing the ratio further to 2.05 times. In 2023, there was a strong recovery. Assets surged while liabilities dropped sharply, causing the current ratio to almost double from 2.05 times to 4.06 times. In 2024, both assets and liabilities grew moderately and the current ratio remains stable at 4.08 times. Now, let's move to the quick ratio. Determined 2020, the quick ratio was 2.05 times. In year 2021, dual pharma quick asset decreased while liabilities increased, causing the ratio to drop sharply to 1.18 times. In year 2022, quick assets recovered slightly, but since liability kept rising, the ratio held nearly flat at 1.15 times. In 2023, a significant increase in quick assets combined with lower liabilities boosted the ratio to 2.60 times. Finally, in 2024, it improved further to 2.70 times.
Hi, my name is Muhammad Amirul Aiman bin Amran. I'm here to present about activity analysis and leverage analysis of Pharma Niaga and Duo Pharma. So here we have collected data from Bursa Saham Malaysia from 2024 until 2020. Okay, first we will look about receivable turnover. So Duo Pharma collect payment faster, showing the better credit control, and Pharma Niaga took longer to collect, mainly due to long payment terms from government contracts.
Assalamualaikum and hello, my name is Nurhazwani binti Ahmad Sukri and I'm going to talk about profitability analysis. The ratios such as gross profit margin, net profit margin, operating profit margin, return on asset, and lastly return on equity. It's a profitability ratio for Pharma Niaga. From 2020 to 2021, profitability improved because largely due to the strong sale, possibly linked to the COVID-19 related contract. For 2022, a sharp downturn occurred with negative gross operating and net margin. The company having heavy impairment costs leading to their major loss and negative equity. This is a red flag for investor. From 2023 to 2024, some recovery is visible, but Pharma Niaga returned to their profitability with positive margin and ROA, but equity remain negative because their liabilities still exceed asset. So this is a Duo Pharma Batas Berhad profitability ratio. Duo Pharma display stable and consistent profitability through the period. For the gross profit margin remains strong, around 37% to 41%, indicating their good control over production costs. For operating and net profit margin were consistently positive, showing that their operational efficiency and profitability. For ROA and ROE, maintain healthy stable, although there was a slight dip in 2023 due to the cost pressure, but improvement in 2024. So the comparison between Pharma Niaga and Duo Pharma, Pharma Niaga ni struggle with high volatility, sharp drop in 2022, and ongoing financial risk due to their negative equity, even after profit recovery in 2024. Duo Pharma shows stronger, more consistent profitability, making more financial stable and attractive company for long-term investor. That's all from me. Thank you.
Okay, right now I will present about leverage analysis for Pharma Niaga and Duo Pharma. Okay, first, Pharma Niaga has a higher debt level, meaning it relies more on borrowing to finance its operations. Its also gearing ratio and debt to equity are generally higher, which increase financial risk. This is partly because of heavy investment in logistics and long-term government contracts. Meanwhile, for Duo Pharma use less debt and is more conservative in its financing. It has a lower gearing ratio, showing a stronger balance sheet and lower financial risk. And the company focus more on equity and internal funding. So, for the conclusion, Pharmaniaga is a more highly leveraged, which can lead a higher return but also higher risk. And Duo Pharma is financial safer, with lower reliance and debt and more stable financial footing.
For the last ones, what can I simplify is liquidity ratio analysis. The liquidity performance of Pharma Niaga Berhad and Duo Pharma Biotech Berhad from 2020 to 2024 reveals a clear contrast. Pharma Niaga display a weak and inconsistent liquidity positions, while Duo Pharma presents a much healthier liquidity profiles, while Pharma Niaga may require strategic improvements to strengthen its short-term financial resilience. The second one, leverage ratio analysis. Leverage ratios assess a company reliance on debt. Two key ratios, the debt ratio and debt to equity ratio, provide insight into capital structure and risk. An increasing debt ratio suggests growing reliance on liabilities, elevating financial risk. A declining trend indicates a more conservative approach. Similarly, a rising debt to equity ratio implies aggressive borrowing, while a decline reflects stronger equity backing. The third one, profitability ratio analysis. Pharma Niaga's profitability was volatile and concerning. Its Pharma Biotech showed stable and healthy profitability throughout. GPM remained above 37%, with strong OPM 11 to 14%, and NPM above 7% every year. ROA and ROE were consistently positive, reflecting asset use and strong shareholder returns. Finally, Duo Pharma Biotech Berhad outperformed Pharma Niaga Berhad across all three key financial dimensions: liquidity, leverage, and profitability. While Pharma Niaga faced financial volatility and structural weakness, Duo Pharma maintained consistent and strong financial health, making it more attractive option for investors and creditors. That's all from me. Thank you.